Buddy, it is Friday the 13th of March 2020. This is Brian Shannon from alphatrends.net speaking. We had a hell of a volatile week. Today we're up 9% for the S&P 500, all that coming in the last half hour of the day. But it was still a very bad week percentage-wise. Oil down 20%. The Biotech's down 12%. Russell 2000 continued to get smashed. So let's look at the daily chart of the S&P 500. We got down as low as what was this low in here? I guess 240, and did a low 240s. Looking at the daily chart, where we really came down to is the volume weighted average price from this low, which is where we bottomed out in December of 18. So that's kind of interesting that that level created at least a low for the week for the S&P 500. Looking over to the daily time frame, though, again, we're below a declining 20, 50, and 200-day moving average. What we want to look at are things like the volume weighted average price from this gap. I mean, getting up to that would be a hell of a rally, and it's quite possible we could do that, but we're still in a downtrend. We have a pattern of lower highs and lower lows. Over to the 15-minute time frame, we did get up to the 5-day moving average, which is declining, and that's also very close to the week-to-date volume-weighted average price. I had outlined a scenario where it was on Twitter, that is this morning, where it was possible for us to get up to there. It certainly didn't do it the way I thought it might because it did break down in here. So, the volatility is just amazing. The, at the end of the day here again, what did we see? Let's look at the 2-minute chart. We saw a rally from 254 up to 270, just a massive move for the S&P 500. And perhaps next week we see that the bleeding starts to bleed off, I guess, and that we start to see maybe a little bit more stability as far as looking for, the possibility of getting involved. As I said in a webinar I did Thursday night, you can find that on alphatrends.net. By the way, it was recorded. We're likely to see some of these, more of these big rallies. We saw a 15-point rally in the S&P 500 on Thursday. Today we saw this big rally. And what they do is induce that fear of missing out. Well, the rally on Thursday completely failed. I'm not saying this one will, but we came up, we're close to closing this gap. Maybe we see something like this happen into next week, and we can start to stabilize a little bit, but and then that 5-day moving average can flatten out, and perhaps we can see a little bit further, consolidation. What we don't want to see, it sounds contrary, is we don't want to see it just ramp straight up, because that won't leave much support underneath it, and we'll continue to see these massive gyrations. If we see something more stable that looks like this, that would be a better base to build for this market, so that if it does come back down to it, perhaps it can hold as support. But for now, looking at this market, we got down to that volume weighted average price. It has been an important level in the past, and perhaps that's what it's signaling again. We've certainly cut through a lot of other levels. I'm not glossing that over. Trust me, when we go back to the weekly time frame, what I had been outlining looks like this. I've outlined each of these volume weighted average price levels as a potential level of support. I've never said it was a good idea to buy at any of these levels. They were potential areas, levels of interest to keep our eyes open, so that we could look for evidence that the buyers were indeed stepping in. And where we look for that evidence is on the shorter term time frames, and then decide whether or not we're going to participate based on the amount of risk we're willing to take. But it was a pretty clean break above this level right here, and you could even say that was a cup and a handle on a very short-term time frame. Again, though, if you're not an intraday trader, just take it for what it's worth. We're still in a downtrend. The Nasdaq also clearly still in a major downtrend. The weekly time frame, if we look at the volume weighted average price levels, I was thinking maybe we have the possibility of coming to the volume weighted average price from this gap. That was not hit, of course, but we're still clearly in a downtrend. Now what we're going to see is what happens at that 200 level, where we have the declining I guess it's actually flat, the 200-day moving average. The volume weighted average price from this gap and for year to date, I don't know why my year to date isn't, it should be sticking onto my chart, but there's the year to date volume weighted average price in blue. That's up with the declining 20-day moving average. So, for next week, I think expect further volatility. It'll be interesting to see what kind of numbers come out over the weekend and other news on the coronavirus, but the market is obviously held hostage to this event. The Russell 2000, just a disaster here, coming down to the volume weighted average price, not from this low, but from the 2011 low, and finally bouncing from that level on the weekly time frame. The daily time frame, just a disaster. There's the week to date volume weighted average price and the year to date. We can also look at this volume weighted average price from the gap. So it looks like the Russell 2000 has clearly gotten majorly oversold, but it's still technically in a downtrend below declining 5-day moving average. So maybe we see something like this occur in the Russell 2000. We start to see a little bit of stability and then able to move higher. What I wouldn't do is chase this market. Even if it runs like this Monday morning, I would prefer to own it a little bit higher than today's close if I could buy it with a little level of support underneath, a little higher low below it. At this point, if you were to buy it, you've got to put your stop way down here, and it's all about trying to find the risk reward that makes sense for your time frame. My time frame is swing trades. As you know, I'm not trying to be perfect in this market, but I got cautious a lot earlier than most people, and this is what I do every single day for subscribers. If you haven't taken a look, it's one of the cheaper subscriptions out there, $799 a year. I see competitors of mine doing it for 3-4 times that, and they have half the experience that I have, and they're just simply not as good. And anyways, let's take a look. Maybe the semiconductors do something like this, that they rally up, pull back a little bit. But what we want to see is a higher low so that we can then get involved and set our stop underneath that higher low so we can protect ourselves in case, we just don't know if it's going to be another one of these types of rallies or these types of rallies, or the one that, finished right here, or this one. We don't know what's coming. It's easy to get excited about this type of strength, but when you back up and look at it, we still have a broken market. The biotechs, as we know a couple weeks ago, were looking like they were the stronger group. They completely collapsed this week, starting with that gap lower on Monday. It came down to the 200-day moving average, which was also the volume weighted average price from the December of 18 low. So you can see that this volume weighted average price tied in with that 200-day moving average. It failed there and just continued to get smashed. So this is where that volume weighted average price was. There was no evidence in there that it was time to be a buyer, and that's exactly what I've been telling subscribers all week. We have a pattern of lower highs and lower lows below a declining 5-day moving average. What we have today is we have a higher high. We don't have a easily defined higher low. Same is true for the S&P. That's why I want to see a pullback first, so that we can get a higher low to protect ourselves against. The financials really got creamed here. The monthly time frame we can look at and go back to the volume weighted average price from financial crisis. You can see we didn't get down to that level, but we did, if I remember correctly, we got down through the trend line from that event, and just a real disaster in this group. The volume weighted average price from the 11 low is where we ended up seeing that buyers finally showed up. There was no evidence that there was a good buy in there as we finished on the lows on Thursday, of course. Today we gapped up, pulled back, and then had that ramp into the close. That's a 15-minute candle right there where we saw it go from 22 to 23. So bottom line is things will continue to be volatile. I will continue to approach this market quite cautiously, looking for spots to get in and looking for individual stocks. I will say it's been tough for the individual stocks with all these gaps. that you have to either abandon your discipline altogether and chase, but then you end up getting stopped out, or just go slow. Be patient, wait for easier times, or just go down to the very short-term time frames and trade off of those. Anyways, have a restful weekend. It's not likely to die down, this volatility, next week.